Rise and grind, trading family. We closed at all-time highs on the SPY and the Qs yesterday. The market threw itself a full party. Then we woke up this morning and the market was asking for Tylenol.
Quick reminder before we get into it. Nothing we say is financial advice. We're two guys talking markets, not telling you what to buy. Do your own research.
VIX spiked 8% while we were sleeping. Oil crossed $100. Bloomberg ran the headline that stocks and bonds both tumbled on inflation risk. The hangover hit before the market even opened.
That Bloomberg headline is the important tell. Stocks down and bonds down at the same time. That's the 60-40 portfolio breaking down simultaneously.
Explain that for people.
Classic portfolio thinking is 60% stocks, 40% bonds. When one falls, the other cushions you. But inflation breaks both legs at once. Both assets reprice lower at the same time.
So the people who thought they were diversified just found out both sides of their portfolio are bleeding. That's not a hedge. That's a trap.
The options market had this read early. The SPY 700 puts are running at 2.4 times normal volume. Put-call ratio hit 1.18.
Someone's loading the fire exits hard this morning.
Could be NVDA earnings hedging ahead of Wednesday. But I don't think that's all of it.
Me neither. Treasury Secretary Bessent was on the network this week, warning about hot inflation data. Tuesday's Producer Price Index, PPI, came in way above expectations.
Core PPI at 1% versus a 0.3 consensus. Headline at 6% year-over-year versus 4.9 expected. That data came in Tuesday. It's not going away overnight.
And then today at 8:30 we get jobless claims. Consensus is 215,000. Prior was 211,000.
If claims come in above 215, labor is softening and the Fed holds. If they come in tight, inflation stays sticky and the rate hike conversation gets loud again fast.
Everything this morning pivots on 8:30. And then Wednesday is NVIDIA earnings. Those are the two gates this week.
Let's talk about NVIDIA. NVIDIA, ticker NVDA, closed at $235.90 yesterday, up 4.42%. Earnings are Wednesday, May 20th.
The run makes sense on the surface. Jensen Huang was literally on Air Force One for the Trump-China summit. Analyst price targets up around $320. Oracle and Meta announced a $20 billion artificial intelligence cloud deal this week. Cisco's chief executive officer told the Wall Street Journal that artificial intelligence is turning every enterprise sale into an existential conversation.
The options flow is bullish, $230 calls running at 3.1 times normal volume. But the relative strength index is showing bearish divergence on multiple timeframes.
Break that down for people.
Price is still climbing, but the momentum underneath it is weakening. Both signals can't stay true at the same time. The stock is extended going into the most important earnings print of the quarter.
Here's my problem with the China angle everyone's running. Jensen was in some great photos at that summit. H200 chip revenue from China is literally zero. Beijing blocked the purchases even with approved licenses. The street is pricing a China reopening based on a photo op, not actual shipments.
The real bull case has to be domestic demand then.
Exactly. Oracle and Meta's $20 billion commitment. Anthropic Mythos going from a product nobody had heard of to the top enterprise topic in 90 days. That's the honest story. But if NVIDIA starts guiding in China revenue projections that aren't there yet, that's when I get very nervous.
What about the $30 billion OpenAI investment?
NVIDIA investing $30 billion in their own biggest customer. Either that's brilliant vertical integration, lock in captive demand, own the relationship, or it's propping up their own revenue story. On the earnings call, Wednesday night, someone asks that question directly. The answer to that question moves the stock.
The options market is split right now. 230 calls loaded, VIX spiking. Someone is going to be really wrong by Wednesday night.
And I know what it feels like to read the artificial intelligence infra thesis right and still miss the move. I lived that this week.
Cisco.
Yeah. I sold Cisco, ticker CSCO, at $92 on May 7th. locked in $156 profit. I knew the artificial intelligence infrastructure thesis was real. I watched every channel, read every analyst note. I just didn't trust it enough to hold into earnings.
And then May 13th.
Cisco ripped 20%. The CEO went to the Wall Street Journal and confirmed everything. Artificial intelligence is flipping enterprise sales cycles overnight. Deals that used to take a full quarter to close were getting same-day CEO approval. Anthropic Mythos went from unknown to the top of every sales conversation in 90 days. The thesis confirmed hard. And I wasn't in it.
That exact demand pipeline is what NVDA reports Wednesday night.
So I will be watching every word of Jensen's call. No NVIDIA position going into earnings. But I am not misreading the same story twice.
Learned the expensive way.
The expensive way. All right, gold and oil. This is the story that tells you what the whole market is actually pricing underneath the surface.
Gold is down $118, 2.52%, sitting at $4,567. Oil is up 3.59% to $100 even.
These two assets both move together under normal conditions. Both inflation hedges, both geopolitical protection plays. This week, they've completely decoupled and nobody's talking about it.
Gold is pricing the Fed. Federal Reserve meeting minutes came out hawkish. The dollar is having its best week since March. Rate hike expectations are climbing. Gold yields nothing. When real rates go up, it gets sold.
Oil is pricing the war. Iran officially rejected the 15-point ceasefire plan. Publicly mocked our defense secretary. The Strait of Hormuz is still closed.
The International Energy Agency called this the biggest supply disruption ever recorded. 20% of global oil and liquefied natural gas blocked at once.
20% of the world's energy supply. That is why oil is sitting at $100, even as gold drops 2.5% on the same day.
Here's the trade I'm watching. When the strait reopens, that volume doesn't trickle back gradually. 20% floods back into the market at once. Oil doesn't drop, it gaps.
You're not betting on direction. You're timing the whipsaw.
Exactly. The beneficiaries on a peace deal are airlines, shipping, energy-intensive manufacturing. They get immediate input cost relief. Energy companies actually get hit, supply floods back, and margins compress fast.
When gold and oil stop moving together, something structural is changing underneath the market. Gold is pricing the Fed. Oil is pricing the war. One of them is wrong about where we end up. And when the wrong one snaps, it snaps hard.
We probably won't know which one for a while. That's the honest answer.
Lightning round. 3 quick hits, and then system checks. EB, Samsung.
Samsung workers 18 days into a strike. The chief executive officer went on record warning against complacency internally. Memory chip prices are already up 60%.
And Micron, ticker MU, got banned from China's server chip market at the same time. 3 forces squeezing memory supply simultaneously. The strike, the Micron ban, and artificial intelligence build-out demand exploding.
The downstream part people are missing. More expensive memory means more expensive servers, more expensive phones, more expensive everything in the artificial intelligence build-out. It's the same cost pressure running through the entire NVIDIA thesis.
Everyone's watching the GPU side of AA. Nobody's watching the memory side. That's where the build-out quietly gets more expensive. Hit 2. Crypto Act.
Coinbase, ticker COIN, up 5.04% to $211.97. The Crypto Act cleared a key Senate vote.
First, real regulatory clarity crypto has ever had. Coinbase transitions from a crypto exchange with existential legal risk to a regulated financial institution. Bitcoin, Ethereum, XRP, Dogecoin. Everything is up on this.
One data point, though. Coinbase up 5%, but Bitcoin was flat on the day. Market is pricing regulatory clarity for the exchange, not the underlying asset.
The value from regulation goes to the exchange infrastructure first, not necessarily the coins. That's the real read here. System checks. Fast. I have open positions in advanced micro devices, ticker AMD, Amazon, ticker AMZN, and First Solar, ticker FSLR, all underwater. About $1,300 in the red combined. Heavy cash. No trades today.
Wave trader running 14 positions. 1 green. Phase Energy, ticker ENPH, hit all 3 profit targets. Everything else red. Uranium getting crushed. Intel, ticker INTC, broke down hard. Micron taking the China ban hit directly. Rough cycle. VIX rate of change is under 4. Still clear to trade by the system rules.
You take the in-phase green, and you keep grinding. That's the job.
That's the job.
One more before we wrap up. GTA 6. Best Buy confirmed pre-orders, open Sunday, May 18th. Take-Two Interactive, ticker TWO, popped 8.1% on just a pre-order date announcement.
Pre-order data is a real demand confirmation. The market's pricing and opening week revenue before a single copy launches.
The most hyped game release in a decade. My guys at the warehouse have been talking about this for 2 years straight. The market was absolutely starved for a real consumer blockbuster moment, and this is it.
All right, here's what we're watching. 8:30 this morning, jobless claims. 215,000 is the consensus number. Above that, labor is softening and the Fed holds. Below that, tight labor and the rate hike conversation comes back hot.
Wednesday, May 20th. NVDA earnings. Biggest print of the quarter. Watch the domestic artificial intelligence guidance closely. If they try to sneak in China revenue projections that aren't there yet, that's the tell. That's when the chart and the story stop matching.
Samsung strike still developing. 18 days in, no resolution. Memory pressure flows directly into server build-out costs. The whole artificial intelligence infrastructure story gets more expensive the longer this drags out.
And Iran. Hormuz is closed. Oil is at $100. TB's asymmetric trade. You're not betting on direction. You're timing the gap when the situation resolves. Beneficiaries are airlines, shipping, manufacturing.
The market hit all-time highs and bought insurance on the same day. Maybe it's onto something. See you Monday, trading family.
Stay safe out there. And don't check your portfolio before bed. Trust me.